My name is Nigel Robinson. I'm the Chief Executive Officer of a company called Central Asia Metal PLC. And if you just move along the slides, Amanda, please. Standard disclaimer in terms of what I'm about to present to you. Obviously, you've all read that very quickly, so let's move on to the actual presentation. So who are Central Asia Metals and where do we operate? Well, we have two operations. One is in Kazakhstan, a country of about 17 million people. It's actually the 9th largest country in the world. And we operate just north of a lake there called Lake Balkhash, in between Astana and Almaty. What do we do there? We have an in-situ dump leach, and that's important. I'll come on to that later. An in-situ dump leach operation with an SXEW processing facility. That stands for solvent extraction electrowinning, and that's a processing facility to produce copper cathode. We've been in operation there and production, should I say, for 9 years, in excess of 9 years now. And we are one of the lowest cost producers globally for pure cathode copper. We have a life of the operation out to 2034 with our license area. And our production in 2020 was just under 14,000 tons of cathode copper. And our guidance for this year is 12,500 to 13,500 tons of copper. On the back of the success at Kounrad with the low costs that we have at Kounrad and the profits and cash flows we were generating, we invested money into an underground lead and zinc mine in a country, North Macedonia. That's the Sasa mine. You may think that's rather odd going from copper to lead and zinc, but we were looking for other copper assets at the time, as we currently are as well today. But what attracted us to this mine in Sasa was its low cost of capital and its low cost of operating. And we bought that mine for $402.5 million in November 2017. As I say, it's an underground mine. It's zinc and lead in concentrate, which then gets shipped over the border and produced into zinc and lead metals, a couple of smelters that we operate from. We have a life of mine out to 2037. And in 2020, our production was 23,815 tons of zinc in concentrate and just under 30,000 tons of lead in concentrate. And we've maintained that guidance for this current year as 23 to 25,000 tons of zinc and 30 to 32,000 tons of lead. So that's where we operate, and that's the basis of the company. If we just go on to the next slide, please, Amanda. Some of the highlights from our results that we announced in early April, our 2020 results, which, as everybody knows, was quite a challenging year for both COVID-19 and an incident which we had at the Sasa mine at our tailings facility in September of that year. And I'll touch more on the progress on that particular aspect of our operations later. But a good year overall in the end. We generated, as I mentioned before, from the production of 13,855 tons of copper and the zinc and lead production, 30,000 tons of lead and 23,800 tons of zinc, we generated from that a net revenue of $170 million. And when I say net revenue, what I mean by that is the revenue that we received as a company after all the smelting charges and the treatment charges of the zinc and lead at the smelters. That was slightly down on 2019, primarily because the first half of the year, commodity prices on all three metals that we produce were fairly subdued with the impact of the coronavirus pandemic. And they recovered in the second half of the year to fairly healthy prices and have continued to do so into this current year, as many of you on the call will know, with strong commodity prices as the world recovers from the pandemic and starts to grow into the green economy and the requirements for the metals that we produce. On the back of that revenue, we produced $95.7 million of EBITDA, and that's a margin of around about 56%, which is a healthy margin for a mining company. In terms of the balance sheet, we had net debt at the end of the year of just over $36 million and gross debt of just over $18 million. Difference between those obviously being the cash that we hold in treasury at the operation. So a good year on a performance-wise, production-wise, and in terms of financial performance. And we also had a very good year in terms of safety on site. We had no lost time incidents, that's LTIs. That's where somebody injures themselves and can no longer work the next day. We had 0 incidents throughout the 2020, and that's something we're particularly proud of. And the last point I just want to raise on this particular slide is that the strong performance in the second half of the year in particular enabled us to reinstate our dividend, something which we've become well known for in the market in terms of paying money back to shareholders. And our dividend for 2020 was 14 pence in total, with 6 pence paid back in November last year, and a final dividend that we announced in April of this year of 8 pence, making 14 pence for the whole year. Next slide, if you don't mind, Amanda, please. One of the things that's key to what we do, and we've been good at historically, is sustainability. I know this has become a key focus for many businesses, but if I go back to the early days when we started producing copper at Kounrad, we have had what we called at the time a CSR director, corporate social responsibility director, on our sites ever since 2013, looking after the community, looking after the environment, and looking after the health and safety aspects of our own employees. Clearly, that aspect of sustainability has broadened, and we're now looking at separate aspects of what we incorporate into our sustainability focus as a company. Next slide, please, Amanda. And just some of the activities that we've been looking at recently, and I won't labor on this particular slide, but we have made sure that we've gone along with the improved reporting. As I say, we've always had a good track record practically on the ground, but a lot nowadays is how you report that to the investment community, how you report it to all your stakeholders in terms of what you're doing for both your governance aspects, the people that you manage, health and safety, the environment, community, all the various stakeholders involved in the business, not just the shareholders. We published our first sustainability report back in April of 2020, and we've recently reported on our second sustainability report, which is now to what's known as GRI standards, that's Global Reporting Initiative, and we now announce and report to those particular standards. We undertook during the course of the year a stakeholder engagement exercise through an external company called ERM to make sure that what we were focusing on as the material aspects of sustainability for CAML were indeed correct, having done just a desktop study for the first initial report. And I think there was a close alignment of those material topics, and we now report on those in terms of developing targets for them and reporting how materially we are improving in those particular areas. We appointed for the first time a group people manager. For many of you, that's a trendy term for a HR manager. And that person who we'd never had before now is managing a group of over 1,000 employees. So obviously the right thing to do to look at the induction programs, the training of people, the development of people, and how we manage our people within the group and keep them motivated and trained, and how we actually exit people when it comes to the time of their retirement. On the tailing side and reporting on environmental issues, we've begun to work towards the global tailing standards, which was introduced in August 2020, and we'll now be moving towards reporting in line with those requirements over the next 3 years and complying with that particular standard. We're also looking at how we can do our part for greenhouse gas emissions by doing a scoping study into a potential solar power farm at Kounrad, and other initiatives that are ongoing within the group, which we're currently work in progress on to formulate and develop a strategy for CAML that will do our part for reducing greenhouse gas emissions. On the outlook, we've, as I say, initiated this strategy to work towards some targets on climate change. And we've also, on our community projects, formed a foundation charity for the operation in North Macedonia here, which is in line very much with what we've been doing in Kazakhstan for the last 5 or 6 years in terms of a separate legal entity to look after the community aspects of the money we put into the community. And I've already mentioned the sustainability report that we've reported on in this particular month. Next slide. Just a slide on economic value distributed. This is becoming more popular with all stakeholders as to how we create value within the business and how we then distribute that value, not just a P&L or a balance sheet for the shareholders. That is a normal thing in terms of reporting, but where do we spend our money? Where do we put our money back into the community? And you can see the table there between the 2 years, 2019 to 2020, where around about 134 to 130 million last year of money was put back to various people in the countries in which we operate, be it through suppliers, be it back to our employees in terms of both their wages and the taxes we pay to the governments, dividends back to shareholders, obviously, payments to creditors and lenders, payments of tax, and then community investments that we put back on a voluntary basis back into the community. I have to emphasize, we do not make political donations at all in the country, in any of the country in which we operate, but we do comply with all the laws of the land and make sure that we're in full compliance with the taxes of those countries. And you can see the amount of tax that we've paid in the time since we've operated in Kazakhstan, close to $163 million. And having only owned North Macedonian assets of SASA for the past 3 years, we've already paid just under $50 million back in tax to the government. Next slide. In terms of targets, this is still a little bit work in progress to give more substantive targets from a sustainability angle. But if you look on the left-hand side there, our 5 key pillars of sustainability are governance, health and safety, people, the environment, and the community. And we've set targets in each of those areas, and we aim to achieve those. In 2020, we've achieved nearly all of our targets. Unfortunately, we did have an incident at our tailings facility at SASA, and I'll touch more on that later. But all the other targets in terms of 0 fatalities, our lost time injury frequency rate, whether we can deliver on local governance in terms of how much money we put into the suppliers. And you can see the list there for 2020, the various targets. As I say, we are working on these targets to make some of them, particularly in the environmental area for water management and greenhouse gas emissions, a little bit more quantitative and a little bit more substantive in terms of actual hard numbers. And that's work in progress and something we hope to deliver on this year. Next slide. One thing we're very proud of as well that we reported in our sustainability report was our alignment to 4 of the 17 United Nations development goals, sustainable development goals. And they are ending poverty, ensuring that we promote healthy lives of all our workforce on site, that we educate them, that we give as best education and promote their abilities as best we can. And finally, on the bottom one there, that we promote sustained, inclusive and a sustainable economic growth and full and productive employment in the areas in which we operate. And you can see our commitment there. I won't read out all the words on the slide, but you can see there's a couple of key areas that we've focused on and feel that we're doing our bit to actually contribute to societies and the people who work in the countries in which we operate. Next slide. This slide simply is showing the alignment from the desktop review I mentioned before for the first sustainability report to where we find ourselves now, a year further down the line, a bit more mature reporting. We did the external report by ERM, as I say, just to make sure that what we thought was material internally from a sustainability angle is also recognized by our external stakeholders across the patch. And you can see a fairly good alignment there of what they felt was important in terms of the value through having good governance in place, maintaining health and safety, the fact that we're caring for the environment and doing what we can there, looking after the communities and focusing on the people, a cluster of the various circles there in the top right-hand corner. And those are the things that we intend to focus on to make sure that we're seen as a credible, sustainable business. Next slide. I've already touched on health and safety. We have a good historical track record, and last year was a particularly good year with no LTIs, lost time incidents on site. It's not something you can ever be complacent about as a manager in a business, but it's something that you can be proud of when you run a good track record, and it shows that the training, the processes you put in place, the monitoring, the awareness is there on site to make sure that all the employees, when they go to work, they go home safely. And again, as I say, something we're proud of. The table shows the statistics there, and that's a good track record that we have for maintaining good health and safety on site. Next slide. Caring for the environment, as I said before, and I won't labour the point, this is important to us. Our greenhouse gas emissions have reduced over the year. You can see from the chart there, the bar chart, should I say, from 2018, 2019, and through to 2020. Our absolute emissions there have actually reduced year on year. Unfortunately, from an intensity point of view, when you measure that against the amount of copper that we're producing, because of a slight reduction in copper equivalents, we convert our zinc and lead into copper units such that we can report a copper equivalent. We are showing a slight increase. And again, as I said before, that's something we're working on to set some reasonable targets, put some plans in place that we can deliver on reductions across the patch over the coming years. In terms of the environmental aspects, we've just go back one if you don't mind. Thanks, Amanda. There's a couple of points there on air quality that we manage as well, water withdrawal in terms of the consumption of water, how we manage the non-mineral waste, as well as how we manage the mineral waste through our tailings facilities, and also biodiversity studies. So there's lots of topics here, lots of things we need to focus on. And what we need to do is manage the targets to make sure that we can achieve some performance improvements over the years just as one does in financial measurements and production measurements. Next slide. Thanks, Amanda. And just turning back to the point I mentioned before, last year was a difficult year, both with COVID-19, but in September, on September the 14th of 2020, we very unfortunately had what's known as a leakage at our TSF4 tailings storage facility, which was a new facility. It happened, as I say, on September the 14th. We lost approximately 8,000 tons of material, which thereby polluted the local river that runs from where the mine is down into the lake, about a run of about 12 or 13 kilometers. We were quick to act upon it. I think we acted in a very open and transparent manner to keep informed all the stakeholders. That means the national government, the local community in particular, our own shareholders, as to what we were doing both to repair the leak and the subsequent damage that it caused on the river and any pollution that it may have caused. I'm very pleased to say that as we sit here today, phase 1 of the river remediation is complete. We estimate that we've removed around about 95% of the tailings between September and December of 2020 from the river. And what we're now into is phase 2, to remove the remaining tailings from any sedimentation traps that we've installed along the course of the river, meet our biodiversity plans to plant trees and grass seedlings and bushes along the banks of the river and improve the biodiversity and get the river back to the status it was before September 2020. Next slide, please. On top of that, the final thing really on sustainability in terms of what happened at the incident last September, we've also committed $120,000 in our input to the community to develop this youth park project along the banks of the river in the town close by. It will be completed in the second half of this year. I'm told today that it will be completed in July of this year, and it would be a great goodwill gesture to the community and a great project for them to go and relax on a Sunday afternoon by the river and enjoy the actual amenities and the river itself, which is now in the process of being remediated back to where it was pre-September 2020, sorry, as I said. Next slide. Unlocking value for our communities. Last year, we spent $500,000 at both projects, $200,000 at Kounrad and $300,000 at Sasa. And I have to say a lot of that money, $300,000 in total of it, was spent primarily on COVID-19 related projects, such as providing equipment for the local hospitals, putting money into a local donation to a local fund, the Ministry of Health Fund in North Macedonia, and helping the local population, both with food supplies, hygiene products, PPE, a whole range of things to help the community out as they went through and suffered through the pandemic, as many people did, and we helped as best we could. Next slide. So that is our focus, which is very much on sustainability. But I have to emphasize, you can only really be a sustainable business if you can make money out of what you do on a day-to-day business. And let's now talk about some of the operations and what we actually do as a business to generate cash flow. If you go to the next slide, first operation is in Kazakhstan, as I mentioned before, the Kounrad copper operation. What you can see on the slide here is an aerial photograph of the site. The kind of open pit you can see there just at the top of the picture, just to put it into scale, is approximately 500 meters deep. There's a twin track railway line runs down that open pit, and it's about 2 kilometers north to south and 1.5 kilometers east to west. That open pit operated from about 1936 through to about 2007, during which time around about 3 million tons of copper was extracted from the open pit and put through traditional processing facilities. What couldn't be processed at the time was actually dumped on the surface as waste material effectively. So to the east, what we call the eastern dumps, was what they classed as the oxide cap, the oxide materials. They dumped that to the eastern dumps. And as they went through the period of actually processing the open pit and taking the waste out and material that they couldn't process because of the grade or whatever it was, they dumped that in an organized fashion on what we class as the western dumps. Around about north of 600 million tons of material there that was classed as waste, but had small amounts of copper in it, anything up to 0.12%, 0.11%. So low grade, but valuable copper nonetheless. And we estimate that there's approximately 140,000 tons remaining recoverable resource. And we've now produced already, as we sit here today, north of 110,000 tonnes of copper from those waste dumps. You can see on the diagram there, just before we move on to the next slide, where we built our SXEW plant. And just to remind you, that solvent extraction electro-winning plant, that initially was a 10,000 tonne plant that we completed in 2012 when we first started production. Over the period of the next couple of years through to 2015, we expanded that plant to a 15,000 tonne nominal capacity plant, and we constructed infrastructure which enabled us to leach both the eastern dumps, where we first started, all the way around to the western dumps. And we installed two 12-kilometre pipelines to ship the solution both from the east and the west to actually process it at that same plant there, the SXEW plant you can see just by the eastern dumps. And just move on to the next slide, please, Amanda. And here's just some statistics showing our production. You can see back in 2012, we started our production, and we're now into 2021. So 9 years of very continuous 24/7, 365 days a year operation of that SXEW plant. It is seasonal. You can see the chart and the columns there, whereby in Q1 and Q4, we do produce less copper because it gets down to -30 degrees in Kazakhstan, which is extremely cold. And with a wind chill factor, it can get even colder than that. We do continue to produce, though, even in those very extremely cold temperatures. We do produce more in the summer, but we produce throughout the year by heating the solution, putting it onto the dumps, and then processing it and keeping the kinetic energy such that the solutions are constantly flowing throughout the year. Over the years, we've slowly increased the production output from around about a starting point of 10,000, as I mentioned before, up to our current level, which is annual guidance of around about 12.5 to 13,500 tonnes. We believe that's fully optimized, fully developed, so we don't expect any increase on that output year to year, but we have got a life of mine stretching out to 2034. The nature and the metallurgy and the characteristics of the dumps themselves are slightly different from the east to the west, but this is all factored into our planning in terms of what we expect to recover from the various dumps and how long it takes us to recover that amount of copper from any one particular cell on the dumps. So, for example, in the east, we estimate that an average leach time is 8 months on any one cell, and we will then recover about 45 to 50% of the copper within that cell. We fully accept that the other 50% we will not recover given the nature of the dumps. And then when we go to the western dumps, and what we've planned in there is that it will take us about 20 months because it's a different metallurgy, as I say, and different recovery programs, but 20 months to recover a slightly lower amount of copper, in effect, 35 to 42%. But all factored into our planning out to 2034 in terms of how we will recover that 140,000 tonnes of recoverable copper that I mentioned before. And the final point on this is you see at the bottom there, a leach curve. That's a standard leach curve for all of the cells that we operate, whereby in the initial leaching stage, you get a bloom of copper, and then slowly but surely, as the days eke out and you get to your 8 months at the east or your 20 months at the west, the curve flattens out such that we move on to another cell because we've effectively, commercially exhausted that dump. The reality is, or that cell, should I say, the reality is that we could stay in that area and still recover small amounts of copper, but it's becoming less and less effective the longer the time goes on, with smaller amounts of copper being generated from the leach process. And the next slide. Key to the success of Kounrad is not just the good management on site, I have to say, of the team we've got there and their understanding of what I make sound a very simple process, but there's a lot of science goes into it, is the low cost nature of it. Low cost because we do it in situ. We do not move any of that material at all. We simply apply the raffiner, which is the highly diluted sulfuric acid and water, onto the dumps. That filters through the dumps, picks up small elements of copper. It gets into the collector trenches. It's then pumped, or by gravity, it moves over to the actual SXEW plant, where it's converted into pure cathode copper. So a low-cost operation. You can see the breakdown there in the table, both between the absolute costs on site as well as the unit cost per unit of pound of copper that we produce. So, for example, in 2020, our on-site costs at a C1 cash cost level were $15.5 million. And that equates to 51 cents per pound of the copper that we produced in that particular year. The pie chart shows the breakdown, A lot of that cost, 37 cents per pound, is in the processing, so the reagents, the power, the people we employ on site, and the balance of it is on the G&A side or the realization. Realization simply being the cost of taking that copper from the site to the end consumer. And we use a company known as Traxys as an off-taker who take that product out to our end consumers. A very simple route to market, a very efficient cash flow process for Kounrad, and hence a very effective EBITDA margin at 75% for this particular operation. And the next slide. Okay, so that's Kounrad. We then moved on to a very different operation, which is an underground traditional zinc and lead mine, whereby you extract the ore, you crush it, you mill it, you then go through a flotation process, you create a concentrate product, and then it's shipped out to a smelter who refines it into the end metal. We have got a long life of mine here beyond the Kounrad mine. So this one's out to 2037 on our latest studies. And you can see a diagram there of the various ore bodies that we have at Sasa. The key ore body that we're mining at the moment, and on that particular ore body, about 70% of the ore is hoisted to the surface and about 30% is trucked through vehicles on the various declines up to the surface as well. And that's the Svinja ore body. That's our primary ore body where we're currently operating. But historically, this mine has been operating since the mid-60s, and they have mined historically at both the Kozja ore body and the Golema ore body. And we're doing some drilling, and have been since we own the mine at the back end of 2017, to understand those ore bodies better and see whether we can bring them back into operation in future years. But at the moment, our life of mine is out to 2037 based on the Svinja ore body alone. Next slide, please. Again, looking at production and an update, this takes us out to the first quarter of 2021. Much of what I've been saying so far this evening has been up to 2020 with our financial results. But you can see their solid performance for 2020 with 23,815 tons of zinc in concentrate and 29,742 tons of lead in concentrate. Our Q1 production was on track for our guidance for this year, both in zinc and slightly under on lead, but we'll be looking at that over the coming weeks. And our guidance at the moment for this year is 23,000 to 25,000 tons of zinc and 30 to 32,000 tons of lead in concentrate. Next slide, please. And again, as with Kounrad, a low-cost operation, not quite as profitable, an EBITDA margin of 51%. But again, the table there shows you the breakdown of the various costs on site between mining, processing, and local G&A, with a total on-site cost around about $32.4 million, generating those unit costs. It is a bit more complicated to understand the C1 zinc equivalent cash cost. But one key factor that we measure, which measures our on-site performance, is the unit cost in terms of run of mine. So you can see on the table there for 2020, our site-based unit cost per the amount of ore that we mined, which was 826,000 tons, was about $39.2 per ton, down from $40.3 per ton in 2019. And you can see the breakdown of the cost there. The one thing which is significantly different with Sasa from Kounrad is the realization costs. It's a fairly simple route to market for our copper product out to the end consumers through the Traxys offtake contract. With zinc and lead at Sasa, slightly more complicated. We have a marketing arrangement through Traxys again, and that has to go to the various smelters. And the prices for smelters can move up and down significantly, and they have done over the past year or so, with the demand and supply for concentrate in the world's markets and the number of smelters available to process that material. And you can see there the significant change between 2019 of $16.3 million at the bottom of the table, increased to $25.6 million. That's over $9 million increase on costs very much outside of our control for the smeltering of the concentrate to get into an end product. We have experienced a significant reduction in this current year of those treatment charges as the amount of concentrate in the market has increased, and therefore the mines have got more of a negotiating position to get better prices. We've seen approximately a 30 to 35% improvement in those prices for the current year from where we were last year, which is all a positive message against a very positive message of strong metal prices on top of that. Next slide, please. Cut and fill project update. One of the things we committed to our shareholders and everything when we acquired Sasa was to do a life of mine review and just make sure that the methodology of mining the ore body on site was the optimum. We spent around about 18 months to 2 years deliberating over this and looking into it and studying it, and came up with the decision that at the board level last year in August that we would move to a method of mining known as cut and fill. At the moment, we do what's known as sub-level caving. Moving to cut and fill has a number of advantages from us as a company, and we're on with that project at the moment. It will eventually, when we get into actual operation of cut and fill mining, which we expect to be from the back half of 2022, we view it as a safer method of mining. It will also address some of the tailings management issues moving forward, in the sense that up to 40% of the tailings can be put back underground from currently where they're put into a tailings facility. And I'll touch on that again later. We are advancing with this well, and we're well on track to deliver that in Q2 2022, when all the capital elements of the project will have been financed and installed, and then we'll move as a transitional period 2023 to 2024 to 100% cut and fill underground. We don't expect a significant increase in operating costs. You can see the numbers there, around about $39 per ton, increasing possibly to $43 per ton. The mining method, as I said, is safer, and the capital to do this is around about $90 million spread over both this year and next year. Next slide, please, Amanda. Just finally moving on to the strategy of the company. If you just go to the next slide, please. Fairly busy slide. I apologize for that, but just to show that we are working, and we always have been working, to make sure that what our purpose in life is, and let's stop there. What is the purpose of CAML? We're here to produce base metals, which are, as we all know now, essential to modern living in a profitable and a safe and a sustainable manner. And in doing so, we need to look at the stakeholders involved in that, such that we deliver for those stakeholders. And that means the employees, the communities, the investors, the governments in the countries in which we operate, and also our suppliers. And so our immediate strategic objectives are to make sure that we deliver on that in terms of keeping low cost and therefore high margins, ensuring prudent capital allocation, and make sure that on a day-to-day basis on site, we focus on the safety and the sustainability of our business. Next slide. Capital allocation, something as a company, I think we've always been good at. I think we have got a good track record on this, and it's key to mining businesses. We have 4 legs to this capital allocation. What do we do with the money that we generate from the profitable operations at both Kounrad and Sasa? First of all, returns to shareholders. We've had a dividend policy in place now since 2012. Our policy is that we pay back between 30% and 50% of the free cash flow that is generated from the 2 operations, that's Kounrad and Sasa. And last year, on the first slide I showed before with the highlights of our performance for 2020, you'll have noticed that that free cash flow was close to $60 million. So we have a commitment that we will pay back 30 to 50% of that free cash flow in dividends back to the shareholders. And our track record bears that out. Since 2012, we've paid just under $210 million back to shareholders. That's around about 112 pence per share. And our final dividend for 2020, which was 8 pence, when added to the 6 pence we paid in November of 2020, makes a full year for 2020 of 14 pence. Now, you'll notice there a number of 57%, so we haven't followed our own guidance. The rationale behind that was that we have got a policy, but given the fact that we didn't actually pay a dividend in the early part of the year for the full year for 2019, because of the uncertainties associated with the pandemic, we felt sufficiently confident of the future for the business, as well as metal prices and our plans for the future, to slightly pay over for the full year for 2020 when we combine the 2, full year and the interim dividend. So that's something which is probably slightly unusual, but I think we'd all agree we have come out of a very unusual period with the impact of the pandemic and everything else that went on last year. So we felt it was a measuring to get us back on track and show confidence in the business to go outside of the 50% range. The other element of capital allocation is deleveraging. When we took Sasa on, we took on nearly $200 million of debt, and we've consistently paid back $38 million of that debt every year since ownership. We pay back $3.2 million of debt on a monthly basis, and we intend to continue to do that until all the debt will be paid off in November 2022. Next slide, please, Amanda. Investing back in the business, I've already mentioned that we're investing both this year and next year a total of $19 million back into the SASA business to bring it into the 21st century, to establish its life out to 2037, and to make it a safer operation and a more environmentally friendly operation with the way we're managing the tailings. So that cut and fill project is what we're on with now, and that's investing money, internally generated money, back into the SASA operation. And finally, growth opportunities. I mean, this is a difficult one because growing a mining business is challenging. You have to go where the geology tells you. You have to go where the metals are. You can't dictate yourself where you want to build a copper mine. It has to be where the copper is, or where the zinc is, or where the lead is. We're constantly looking at opportunities. We're constantly trying to find the next opportunity for CAML. Given that we've got a fully developed project at Kounrad, we generate very good cash flows at both the operations. We have a very strong and solid balance sheet and base from which to grow from. We just need to find that right opportunity in the metals that we're interested in to actually get us to the next level of growth as we move the company forward. And the next slide, please, which really is the final slide you'll be all glad to hear, I'm sure. The outlook for the future is that, as I've mentioned, we have a strong business. We have strong operational performance, low cost production. I think we've got our capital allocation priorities about right. It's never perfect for everybody, but we feel we've got the balance right as a company. And we're looking out, as we sit here today, on a very encouraging environment for metals. The commodity markets are going through a bit of a boom at the moment as the world recovers from the pandemic, and all governments across the world are giving very difficult and aspirational targets of when they'll get to net zero. And the metals that CAML produce are the only way they're going to achieve getting to some of those net zero targets. So the demand for these metals is significant, particularly in the case of copper that we produce at Kounrad. And on that note, I'll stop talking. I'll open the floor to any questions, and thank you for your time for listening to Central Asia Metals.
Well, thank you very much, Nigel. That was fascinating. And we have quite a lot of questions, but we can always do with more. So everyone go and have a look at what questions have been asked and see whether someone's asking something you're interested in. And if they are, give a thumbs up. If not, write the question that you want to. Yeah. We'll start with the most popular one to date, which is probably quite predictable in a way, whether there are any ongoing legal or governmental issues in relation to the leakage event and any financial impact that that might be to come above the cleanup in terms of penalties, etc.
No, it's a very good question though, Paul. And at the time of the incident, I very quickly flew out to site. My chief operating officer was out there. Nike Peasold helped us, and my sustainability director. And we went and met most of the ministers in Skopje, really, to effectively to own up to the responsibility for it, to communicate with them as to what we needed to do. There was a statutory fine. That was 65,000 euros. We paid that straight away. And what we tried our best to do is to keep close with all those various stakeholders, the local communities, etc. So there are no ongoing liabilities above and beyond our own liabilities to remediate the river and the costs that we've incurred in repairing the actual facility itself. I have to say, we went into this incident with a good relationship with the local community and the government, you know, having worked hard at it since we acquired the mine. And I think that's held us in good stead. I think they've viewed us as, you know, a business that is responsible, that does do what it says, and delivers on the plans to recover from that situation and take responsibility for it. And, you know, I'm not aware of any other liabilities that we have. We've had a few grievances locally and we've settled all those. We had an issue, for example, with the Fishermen's Association. We sat down, negotiated with them and came to a settlement over the next 4 years that we would contribute to their, you know, their activities in the lake and help them out with extra fish stock, etc., etc. So it's that kind of personal touch, I like to think, which stands you in good stead so you don't end up in the courts, etc.
Well, actually, that leads to a question which isn't the most popular one, but it is relevant, and that's how many people do you employ in each facility? Because I imagine in SASA, you are probably one of the larger employers in the area, which gives you some goodwill.
Yeah, it's interesting. Of the two operations, Kunrad, we employ about 330 people on site, and the local town of Balkhash is, say, 65,000. So, and Kazakhstan, 17 million people. We're a small business in a really big country, effectively. In North Macedonia, we're within the top 10 businesses in terms of size and tax paying and whatever measure you really want to put in front of people. So we employ about 700 people at the Sasa mine. The local town nearby is a population of 5,500 people, something of that magnitude. So you can see just the direct workforce, the indirects, excuse me, and then all the various suppliers were a significant part of that town and the lifeblood of the local community, certainly, and actually quite an important business in North Macedonia. Now, I don't think that therefore gives you any favors if you do something, you can't be arrogant about it and do, like what happened with the incident, and therefore think because we're a big business, there's no problem. You still have to, make sure that you establish the trust and the respect of those people for what you do, really. But we are, you're right to point out, a fairly big business in Macedonian terms, I would argue.
There's a question here about the any concern you've got that the Kunrad and Sasa mines have relatively similar lifespans, but I guess I just expand on that a little bit. I mean, with Kunrad, are you pretty certain that, in terms of the life of the mine, because you're dealing with the tailings, do you feel you've got a very accurate idea of with the waste dumps rather? Do you feel that what you see is what you get there? Whereas presumably with Sasa, it's down to what you find when you carry on drilling, you'll find out more. Is that broadly right?
Well, you're spot on, Paul, really. I mean, it is WYSIWYG. It is what you see is what you get at Kunrad. Now, I would add to that, though, a bit more colour is the fact that we plan on the basis of 140,000 tonnes recoverable, because we will not be doing a drilling programme and all of a sudden find a lot more resource. But what we could do beyond the 2034, contractual licence period is continue to leach there. And where that leach curve tails off, maybe do another 6 months. What we already do it to an extent. We call it rinse and rest, a bit like farming where you leave a field fallow for a bit. So we leach it and then we'll leave it for a bit and then we'll go back and you'll pick a little bit more copper up. And with copper, north of $10,000 per ton, why wouldn't you do that, of course? So we will, but commercially speaking, our plans for shareholders particularly is out to 2034 and recover 140,000 tons more of material. And we're set to do that. And we've got our plans in place for it. But I do think it's a fair challenge to say that we may well be able to, and I think we'd have priority on it, extend that license and carry on at a lower level of output, leaching for another 5 or 6 years possibly, which are, at such low costs, and there would be no extra costs because it's all sunk cost really. It could still be a profitable little operation, but we don't use that as a kind of marketing tool at the moment, but I think that is valid. Whereas you're right, at Sasa, we can do more drilling and find more maybe at Kozhyu Reka and Golema Reka, and we are on the case of doing that. But I have to qualify all of that by saying, we may find a little bit more that'll at Sasa, which might take us out to 2040, 2042. I don't think it's going to be materially, that significant, if I'm being perfectly honest and frank. Right.
So that leads us on to the most popular question left, which is that you're scheduled to pretty much clear debt by 2022. So in the absence of suitable acquisitions, what's your plan going to be? And I assume that the preferred route is to find suitable acquisitions, but the market presumably for acquiring mines in these metals is pretty buoyant at the moment. What are you going to do with all that money? What a problem.
Well, I know what the shareholders would like us to do, which is to grow the business in what we're good at, which is mining base metals, and in particular copper. And you're right, the market is buoyant at the moment, and but that brings positives and negatives. In some ways, with the metal prices where they are at the moment, more things come up for sale. People want to exit certain things because they've been waiting to exit when the prices are right. If it's a private equity investor, maybe. So it probably brings more things onto the market. And it also makes the discussions about valuing an asset, which you have to do on a discounting cash flow basis at $3 copper, an easier conversation, because when copper's at $2.50 and you're saying, but let's value it at $3, that's a difficult conversation. So I think there are a number of positives when the metal environment is as it is at the moment, but it starts to bring its challenges when people expect overinflated valuations of assets because these metal prices probably may not last. Some people say they will, who knows, the verdict's out, but you've got to be, whenever you value these things as a prudent board, you've got to be valuing them on what our long-term price is, because as we all know, the commodity cycle goes up and down. You know, only 12 months ago, copper was below $5,000 a ton. Who would have thought it'd be now nearer $11,000 a ton? Not many people, I don't suspect. So you do have to be conservative. And I know when we did SASA, I know what we valued the zinc and lead products at. We valued them at $1 per pound zinc and 90 cents per pound lead. And it's above that at the moment. But at the time, zinc was a lot more than $1 per pound. I think it might have been close to $1.50. We couldn't have valued it on that because investors would not have followed us. Bankers would not have invested, lent us money on that basis. So when you're financing it, you have to be fairly prudent, you know, and value it on long-term prices effectively, which makes it, you know, challenging when prices become so frothy, certainly in the case of copper, that everybody thinks it'll last forever. I think there's a good story behind copper, and I think there's a lot of strong arguments that it will stay. Certainly, there's been a systemic shift, I think, in the price of copper, given the way the world's going. But that is a challenge when you're valuing the business, and you know, so more come onto the market, but actually paying the right price and getting a fair deal, should I say. You have to pay a good price for a good asset. We all know that, and we had to at SASA. People said we overpaid for SASA at the time. We felt we got a good asset for a good valuation and a good price, and you know, that'll be borne out over the years of operating it effectively.
But presumably, you know, your sweet spot is often going to be resources which are possibly too small for the majors to get hugely excited about, and there's always, you know, opportunities there in that space for whatever reason.
Yeah, I think there are. Look what's happened in the gold market. There's been a lot of consolidation there, really, and we're a company of, you know, with current price at the moment, between $600 to $700 million market cap. It's quite a tricky position to be in capital markets terms, because you're not up there with the big boys. You're not on the. You probably need to be above $1 billion, really. Otherwise, you're suffering a little bit from what we call scale and liquidity issues. I mean, our liquidity as a stock has improved since we acquired SASA, and it's constantly evolving, and it's developed well. But we're still in a tricky situation where you need to get to that next level, and that's what we need to do as a challenge, really. Not just for the sake of producing more copper or more zinc or more lead, but because from a business point of view, it will make it easy. You maybe get onto main board, you get tracker indexes. There's a whole host of reasons why getting to that next level will be beneficial for us, really. But finding the right asset at the right price with all the right combination of jurisdiction and technical aspects is quite a challenge, actually, I don't mind saying. And personal view is that I do believe we'll see an element of consolidation in the base metals market, you know, combinations of various companies to get to that next level, really, which is difficult because, as you rightly point out, Paul, there's certain assets out there that the big boys aren't interested in. They've got to be of a certain scale for the big players. And for us, it's got to be of a certain scale as well, I think it's fair to say. And they're not that easy to find, some of these opportunities.
So just to do my Jeremy Paxman thing and go back to the original question then, you know, what would your plans for the net cash be if debt cleared in 2022?
Yeah, I didn't on purpose avoid that particular aspect of the question, but I generally, you know, we haven't got any plans for it at the moment. I'll be quite honest with you. Our dividend policy, as I stated before, is 30 to 50%. We did go above that on the final dividend for 2020 for the reasons I stated. But if we are in a situation where we still haven't found something, I think we'll have to sit down with the board and see how do we do it. I'm not personally a big fan of a special dividend. One, because I don't think you get any kudos or credibility for it moving forward. It's forgotten about, it's banked and then it's forgotten. I think you have to establish a trend to create the value in the business. Nor am I necessarily a big fan for a company like ours of a buyback, because that can reduce liquidity, whereas we want to increase liquidity. So it's a tricky question to answer, to be honest with you. Yeah. But it's a good problem to have, possibly.
No, I know there are other companies in the sector, in the gold mining sector, in exactly the same position. And it's probably testament just to how profitable the core activity is at the moment, that you're you know, piling up the cash, and that's not the worst position to be in. So on to another question then. Do you hedge production at all?
We have. At the moment we don't, I mean, historically we haven't generally. We've always looked at it, but because we never had any debt and then we acquired debt, but we've always been a low cost operator, and therefore we can all sleep fairly easily in our beds knowing that the bills can be paid at most commodity price levels. So we haven't had to hedge as a kind of insurance aspect of the operation. So we haven't generally. We've often, several times we've hedged on a kind of what I call an opportunistic basis, where we've seen a spike in the prices and thought, let's book in some prices forward because that seems a good price. Bit of a thankless task, because you can win some, you can lose some, so you never get thanked fully, but as a CEO, so it's a difficult one. At the moment, though, we have got a hedge program in, and the reason we put that in, which was back in December 2020, was because we're experiencing a fairly high capital level of expenditure for ourselves this year and next year, based on the SASA improvements that we talked about before to transition to cut and fill. So what we did was we hedged to cover those capital costs. So 30% at the moment of our production of both copper, zinc and lead is hedged out for the next 12 months from December 2020. The other 70% is fully exposed to the open market. And, you know, hindsight's a wonderful thing. I know that the hedge at the moment in copper is outside of those limits, but that was a decision we took on a prudent basis as a board, that we thought it was the right thing to do.
Yes, well, there was another question that was on that point, which I think I'm going to consider answered on that. But I mean, I would just make the point that, you know, when you hedge, you know, it's a form of insurance in the end, and you know, you don't need it when you're cash rich, etc. But when you've got obligations coming up, etc., it you know, it sometimes does make sense, and it's easy.
Yeah. And I think that's the way the board viewed it, really, Paul. More to cut off the, you know, from an obligations point of view, we don't want to into the game of being speculative about these things.
No, it's managing risk. What about at the end of life, the project life? What do you have to make accruals for cleanup, etc.?
Yeah, we have those in the balance sheet, I think, at the moment. I used to be a CFO, I'm not, so I'm probably a bit more distant from it at the moment. I think we've got about $6 million as a provision for both operations in terms of what we'd need to do. And again, that's not hard and fast what you need to do. You have to do some judgment calls on it because nobody lays it out exactly. But yeah, we've got about $6 million, I think, and I'll double check on that. But if I'm wrong, I apologize and I'll get back to people. But I think that's the level that we've got in. But it's certainly an exercise we go through, asset retirement obligations, with the auditors every year to make sure that we have sufficient funds set aside for the you know, parameters, the obligations that we may have at the end of the life of mine.
Okay. Do you still have the assets at Copper Bay?
We're going through a sales process. We have been for some time now, to be honest with you, on Copper Bay. So yeah, we don't. They've all been fully written off the balance sheet. We don't. I suppose technically we do still own them at the moment, but we're going through a sales process.
Right. And can you elaborate on the disposal prospects? I've been.
No, I wouldn't like. No, I'd rather not at the moment. If I'm honest with you, that's confidential.
Fair enough. Why was SASA Zinc for Q1 under forecast, and how is this likely to be addressed to achieve the budget numbers for the year?
Why was SASA Zinc? You mean the Q1 production numbers?
Yes, yeah.
Yeah, I mean that's something which it was slight. We had some mill issues on site in Q1, so that was part of the issue. It wasn't significantly, so we didn't change our guidance for the year because, you know, as you know, with all production facilities, you need to monitor it through a longer period of time, really. In terms of, we've had periods at Kounrad where we've been slightly under, but we've made it up through the course of the year. So it was nothing significant, nothing that material. But we did have some issues with one of the mills that was unexpected, and we had a bit of downtime on one of our mills.
This is always a good question from one of our regular listeners. Are there any specific risks which keep you up at night, and how are you mitigating them?
I think the biggest thing that worries you from a mining perspective is on the health and safety side. To have a fatality on site is my biggest worry, if I'm perfectly honest with you. I don't worry about, you know, running the operation and running the business risks. There's always things you can do on that sense. You know, you can always, like I said before, we had some mill issues. You deal with it. That's what mining's all about. There's nothing ever runs 100% smoothly, and anybody thinks it does is kidding themselves. Having a fatality on site will be the worst thing for me as CEO, because, you know, you want to make sure everybody goes home safely at night. And so we put a lot of effort into making sure that we have safe operations. People are well trained. People got the right PPE. People who understand the risks, where the risks are, and we mitigate those risks as best we can. I think the second one on my list would probably be having a tailings facility leak. If I hate to say it, Paul, and that's what happened to us last September. And so the call I received on the Monday morning on September the 14th is ingrained in my memory, and that was most unfortunate. I think we've dealt with it well, but it's something which, you know, you don't want to happen to you. So, you know, those are things. We do have a fairly mature and a good process for managing risk on site. We have a risk committee. We get all the technical people. We try and ascertain what all the risks are and mitigate them as best we can. So yeah, I think we've got a good team. I don't lose sleep every night over everything. If I worried like that, I couldn't do my job, I don't think. So you have to put in place as good a processes as you can to understand where the risks are, mitigate those risks, and deal with them as best you can, really. But so we had one that was a big issue, big concern last year. I think we've dealt with it well. But yeah, health and safety is an important thing on site.
Yeah, I think from an investing point of view, I think the incident you had last year is a prime example of why people should buy good companies when they release bad news, in a way. That it was if you're just purely looking at it as a shareholder, or as a potential shareholder, that actually was a very good opportunity. So I guess probably the sort of two final questions then. One is, would you ever become an explorer rather than continue your successful approach of buying sort of mines that are already in operation, already known quantities?
Well, the answer to that is most definitely yes, we would. It's maybe not our priority, because there's the challenges I said before about scale and liquidity. That's not going to turn the dial, and the lead time between exploration to actually getting cash flow and production can be quite significant in mining. So it's not our number one priority, but certainly we have tried exploration in the past, and there's no reason why we might not try it again in the future. We had the Shuak operation, some people might remember, in Kazakhstan. It didn't come to anything, and that's the nature of exploration, which is unfortunate. We probably invested about $2 million into it, so we didn't lose a lot of money necessarily, but unfortunately it never came off. Likewise in Mongolia, very much in the early days of CAML, we had exploration there and they didn't. So it's not something we've given up completely on, and we do look at exploration from time to time, but it's not our main focus, because it's not really going to change the dial for a company with a market cap as our own of between $600 and $700 million, depending on which day you look at it, really. So yeah, we still would look at exploration, definitely.
And obviously your name is, Central Asian, but, would you look beyond that area? I mean, are you open to things sort of globally?
Again, Paul, yes, we have to, really. In the mining industry, as I said before, you have to go where the geology is. And there are some countries we've already, as a board, when we've looked at it, discounted and said we don't want to go there. The political risk is just too high. But certainly where we operate in the Central Asian region of Kazakhstan, we're certainly keen to look and try and find some assets there. The Balkans, Europe, we've looked, as somebody mentioned, Copper Bay before. So we have been into the Americas, South America, Peru and Chile and those areas. We've looked in Africa. So yeah, we're fairly global in that sense. We've tended to ignore the Far Eastern area because of time zone differences and the management of assets on such a different time zone. But apart from that, we're fairly agnostic, I would say, it's fair to say, which is a pretty woolly answer, and I'm sorry about that, but it's the nature of the beast, really. Ideally, you find something close to where you're used to operating, in Europe or the Central Asian region, because you don't have to do all the extra hard yards on developing relationships in a country, which can be quite challenging, can be quite time consuming. So you've got a track record in that country, you're welcome into that country, and it makes life easier. But if we just restrict ourselves like that, we probably would restrict the search for opportunities too greatly, really. So we look further afield than that.
And we got through the questions very well. So we're down to the final one, which is an easy one. What are the conservative long-term prices you are valuing on? Or do you, as I think might be the answer, really try not to take too much of a view on it at all?
I think we have to take on metal prices, is that, Paul?
Yeah.
Yeah, well, we have to take a view on it, don't we? And we are informed by, we talk to people like Wood & Mac, our brokers, the bankers and the investment analysts and all the rest. We take their information and we get consensus metal prices. So for example, if you look at the long-term price of copper, at the moment, long-term consensus, I think is still $3 per pound, which is about $6,600 per ton. Now, clearly as a company, I think we've probably got a more bullish view on copper than that. So I haven't got a specific number I can give you, Paul, but I think that will I think there'll be a change in that long-term price of copper, personally, myself. But yeah, I said before on Sasa, we valued zinc at $1 per pound, which is about $2,200 per ton. We valued lead at 90 cents per pound, which is about, I don't know, close to $1,900 per ton, something of that size, or close to $2,000 per ton. I think that will always be our starting point, and certainly for zinc and lead, it's probably still closer to those numbers. I do think that copper is creating its own story as the new oil, effectively, isn't it? You can't get to those net zero targets that are all government related without somehow having a massive increase in the supply of copper, which is difficult, we all know, and the demand itself. I mean, Glassenberg said the other day, I think he said another 8 million tons per annum by 2030. I think that was the statistic. It's certainly a huge amount of copper required if all these targets are to be met. And where's it going to come from? So that underlying fundamental story about copper can only make the price move upwards.
Yes, well, you know, the big South American mines, they're finding it harder and harder to, you know, increase production, aren't they, to find new resource, and people look elsewhere. As you say, demand is going to be growing ever bigger.
It's fundamental economics, supply and demand, isn't it, ultimately? And I think the price is maybe a little bit frothy currently, just because of still supply shortages and, you know, hearing about strike issues, and that's still, you know, COVID issues, all kinds of issues to affect the supply in a world where everybody knows the demand is going through the roof effectively. So it's
well, you probably, well, I know these days with the internet, you can listen to anything anywhere, but on Radio 4 Today programme this morning, there was Sir John Armitt was talking about the UK infrastructure needs, and saying that the number of charging points for electric cars was going to have to rise from about 50,000 we've got currently in the UK to 2.5 million by 2030. And that's just to enable the adoption of the technology, because people don't want to buy cars unless they know that they can get them charged up. And you think, you know, all that electricity is going to have to be pumped through wires. Well, it's going to flow, it won't be pumped. It's going to flow through thick wires that are going to be full of copper. So there's an awful lot of demand coming. Well, listen, that was fantastic, very informative. I certainly learned an awful lot, Nigel, about CAML, and found it, you know, very informative. So I can only thank you very much from ShareSoc and all our members. As ever, for everyone that's attending, there's a feedback form we'd like you to complete, and there's also a Signet after meeting going on, and there were quite a lot of, there you go, Amanda's very good at the slides. There's a lot of upcoming events. You can see what they are there. We've added a few to the list just today, new ones. I think Alimentis and Central Nick are new ones. So you can sign up and join in those, and enjoy your evening. As I say, on the chat, there's the link to the Signet after meeting. So do encourage you to go to that. You can get the Stockopedia report as well. And thank you very much for attending. Thank you very much, Nigel, for your time, and we will no doubt meet again soon. Thanks, everyone.